Most people think insurance claims are decided by facts. Something happened. Damage occurred. You document it. You submit the claim. An adjuster reviews the file. The evidence is weighed. A determination is made. If the loss is real and covered, the claim gets paid. That belief feels reasonable because it matches how the process is presented. The forms ask for dates, photos, receipts, statements. The language suggests verification. The waiting feels procedural, like paperwork moving from one desk to another. And for some claims, that is exactly what happens. But for many others, something quieter is at work. The claim does not fail because the damage is unclear. It does not stall because the paperwork is incomplete. It does not turn because someone made a bad call. It changes because the system has already decided how much uncertainty it is willing to carry. That decision usually happens long before a denial arrives, long before an appeal is filed, long before anyone explains what is missing or why the process has slowed. From the outside, the claim feels like a request for help. From the inside, it is something else entirely. It is a data point, a cost signal, a probability problem. Insurance systems do not experience claims as individual stories. They experience them as volume, variation, and exposure. Each claim adds load. Each unknown adds risk. Each delay carries cost. Most of that calculation is invisible to the person waiting. You experience the process as silence, or as requests that seem slightly off, or as a growing sense that nothing is actually moving. You check the portal. The status has not changed. You call. You are told the claim is still under review. You send additional documentation, even though you already sent everything they asked for. Nothing feels adversarial. Nothing feels explicit. And that is part of the confusion. When a claim is denied, it often feels sudden, as if a line was crossed without warning, as if something that was going to work simply did not, but the line was crossed earlier. It was crossed when the claim stopped being evaluated as an event and started being managed as a category. It was crossed when the system decided that this claim carried too much uncertainty to resolve cleanly, too much time to close efficiently, too much variability to process without friction. From that point forward, the outcome was no longer about whether the loss was real. It was about how much effort the system was willing to spend finding out. Insurance companies do not think of this as denial. They think of it as triage. They think of it as prioritization, as workflow management, as responsible risk control, and most of the time the system is still working. Claims are processed, payments are issued, losses are covered. The machinery hums along, quietly sorting thousands of files a day. But once volume increases, or costs rise, or uncertainty spreads, the system behaves differently. It does not stop working, it tightens. Decisions shift from resolution to containment, from clarity to classification, from helping a claim move forward to determining how long it can be held without breaking something else. That shift is not announced. There is no notification that says your claim has entered a different mode. There is no language that explains what the system is now optimizing for. You simply feel it, in the waiting, in the delay, in the sense that the process is no longer responding to you, only to itself. This episode is about that moment, not the denial, not the appeal, not the paperwork, but the quiet point where an insurance claim stops being about damage and starts being about tolerance, about how algorithms, thresholds, and timing quietly decide which claims move quickly, which ones slow down, and which ones exhaust the people waiting on the other side. Because by the time you are told yes or no, the decision has already been shaped. And like most modern systems under pressure, the insurance system does not fail loudly. It adapts. That is what makes it hard to see and harder to question. Part 1. When claims stop being about damage. Insurance is sold as protection against events, a fire, a flood, a collision, a storm that does not care what day it is or who it hits. The claim is supposed to be the moment when that protection becomes real. The paperwork is framed as translation. You take something chaotic and turn it into something legible. Photos, dates, descriptions, proof. The underlying promise is simple. If the damage is real and the coverage applies, the system responds. That promise holds as long as the system can treat each claim as a contained event. But modern insurance systems do not experience claims one at a time. They experience them in aggregate. Volume matters. Timing matters. Patterns matter. A single claim is manageable. Thousands arriving together are not the same thing. The system does not suddenly become cruel when volume rises. It becomes cautious, because at scale, claims are not just losses. They are signals. They signal exposure. They signal volatility. They signal whether the system's assumptions about risk still hold. When those assumptions are stable, claims resolve cleanly. When they are not, claims begin to behave differently inside the system. This is the moment when damage stops being the central concern. Uncertainty takes its place. Uncertainty is expensive. It takes time to resolve. It takes labor to investigate. It takes capital to hold open. Insurance systems are designed to reduce uncertainty as efficiently as possible. Clear claims move faster because they are predictable. Ambiguous claims slow because they demand attention. This is not about honesty. Most delayed or denied claims are not fraudulent. They are unclear. The cause is complex. The scope is debatable. The timeline is messy. The documentation raises questions instead of closing them. From the claimant's perspective, more information feels helpful. From the system's perspective, more information can increase variance. Each document adds branches. Each explanation creates exceptions. Each detail complicates the path to closure, and complexity carries cost. Insurance companies do not think about this in moral terms. They think about it operationally. How long will this claim stay open? How many touch points will it require? How likely is it to escalate? How much downstream risk does it introduce? Once those questions enter the frame, the claim is no longer just about damage. It is about effort. Time is the system's most constrained resource. Adjusters can only manage so many files. Review teams can only resolve so many edge cases. Capital must be reserved for losses that are probable, not merely possible. When claim volume rises or loss patterns shift, time tightens. And when time tightens, systems stop asking what is fair. They ask what is manageable. This is where the logic begins to change. Clear claims with standard trajectories move quickly. They match known patterns. They close cleanly. They do not require escalation. Claims that sit between categories behave differently. They linger. They accumulate notes. They generate follow-up requests. They stay open across reporting periods. Not because someone wants them to fail, because the system does not know how to carry them efficiently. At this point, the system's goal subtly shifts, not from paying to denying, but from resolving to containing cost, containing exposure, containing uncertainty. This is why insurance systems invest so heavily in categorization. Before a human ever reviews a claim in depth, the system needs to understand what kind of problem it is dealing with. Simple or complex, routine or volatile, predictable or risky. That classification happens early, and it happens quietly. From the outside, the process still looks like review. Forms are acknowledged, requests are made, statuses update occasionally. From the inside, the claim has already been reframed. It is no longer a story about loss. It is a probability problem waiting to be sorted. This is not a failure of empathy. It is the consequence of scale. When systems are small, they can afford to resolve complexity through attention. When they grow, they resolve complexity through structure. Structure requires sorting, and sorting requires deciding which claims are easy to carry and which ones are not. Once that shift happens, the experience on the other side changes. The claimant feels delay. The system feels control. The claimant feels ignored. The system feels protected. Nothing has been denied yet, but the ground is already moved. The claim is no longer moving toward resolution. It is being held, managed, positioned. This is the point where people start to feel that something is off, even though nothing explicit has happened. The emails are polite. The language is neutral. The process continues. But the claim is no longer being evaluated for truth. It is being evaluated for tolerance, and tolerance is not evenly distributed. Some claims fall below it easily. Others hover just above it, long enough for time itself to become part of the decision. That is where the next layer comes in. Not denial, not approval, scoring. Part 2. The scoring you never see. Most people imagine insurance decisions as yes or no, approved or denied, covered or excluded, paid or not paid. That is not how the system experiences them. Inside modern insurance operations, claims are rarely treated as binary outcomes. They are treated as classifications. Before a claim is resolved, it is sorted. Not by hand, not all at once, and not always visibly. Long before an adjuster spends meaningful time with a file, the system is already asking questions that have nothing to do with blame or belief. How complex is this claim likely to be? How variable are the possible outcomes? How much time will it take to close? How likely is it to escalate? These questions are not philosophical. They are operational. They exist because scale demands triage. When thousands of claims move through a system every day, attention becomes scarce. Human review is expensive. Deep investigation cannot be applied evenly. Something has to decide where effort goes first. That something is scoring. Claims are not evaluated solely on what happened. They are evaluated on how they behave. A claim that fits a known pattern moves easily. A claim that deviates raises flags. A claim that spans categories becomes heavy. None of this requires malice. It requires structure. Algorithms do not decide whether your loss matters. They decide how your claim fits into the system's existing models of risk and effort. Those models are built from history. What similar claims cost? How long they stayed open? How often they led to disputes? How frequently they required legal review or escalation? When your claim enters the system, it is compared to that history, not to determine truth, but to estimate friction. This is where many people misunderstand what documentation does. From the claimant's perspective, documentation should reduce uncertainty. More photos, more reports, more detail. The instinct is to be thorough. From the system's perspective, documentation can increase uncertainty. Each new piece of information introduces another variable, another interpretation, another possible path the claim could take. A clean claim is one where the story closes quickly. A complicated claim is one where the story keeps branching. The system values closure, not because it is indifferent to outcomes, but because open files are costly. They tie up reserves. They demand monitoring. They distort forecasts. This is why claims are scored early, not to decide their fate, but to decide how much attention they can safely receive. Claims that score as predictable move through automated or semi-automated paths. They are reviewed quickly. Payments are issued. Files are closed. Claims that score is unpredictable are not denied immediately. They are flagged. They are routed differently. They wait longer. They attract more conditions. This is where the idea of manual review enters the picture. Many people hear manual review as reassurance. A human will look at it. Care will be taken. Judgment will be applied. Sometimes that is true. But manual review is also a category. It signals that the claim does not fit cleanly into automated resolution. It means the system expects effort, variation, and time. Manual review does not guarantee approval. It does not guarantee denial. It guarantees delay, and delay has consequences. A claim in manual review occupies space in the system. It requires follow-up. It generates internal notes. It moves between teams. It remains open across reporting cycles. That open state is not neutral. Open claims are risk. They complicate forecasting. They require capital to be reserved. They increase exposure if patterns shift. So the system watches them closely, not to understand them better, but to manage their impact. This is where scoring becomes dynamic. A claim score can change over time. Each interaction adds data. Each request not met promptly adds friction. Each follow-up that raises new questions increases uncertainty. The claimant experiences this as repetition, another request for documentation, another clarification, another delay without explanation. From the system's perspective, this is refinement. It is the model adjusting its confidence. Claims that move to a resolution are rewarded with momentum. Claims that resist closure drift. This drift is not punitive, it is structural. The system does not ask whether the claimant is patient or persistent. It asks whether the claim is stabilizing or destabilizing. Stabilizing claims get resolved. Destabilizing claims get contained. Containment does not look like denial. It looks like waiting. It looks like additional requirements. It looks like longer timelines. It looks like silence punctuated by polite updates. At no point does the system say that the claim is unlikely to be paid. It simply behaves as if the claim is expensive to carry. This is why outcomes feel opaque. The decision is not a single moment. It is a slope. By the time a denial arrives, the claim has already spent weeks or months in a category where effort outweighs certainty. By the time an appeal is filed, the system has already learned how much resistance the claimant can sustain. This is not a test of truth. It is a test of tolerance. Tolerance for delay. Tolerance for uncertainty. Tolerance for cost. Claims that remain within the system's tolerance thresholds eventually resolve. Claims that exceed them do not, or resolve in ways that feel partial, delayed, or diminished. From the outside, this feels deeply personal. The loss is real. The need is urgent. The waiting feels unnecessary. From the inside, it feels procedural. Another file, another classification, another resource decision. This is what makes the process so difficult to challenge. There is no single decision to argue against. There is no clear error to correct. There is only a system that has quietly decided how much attention it can afford to give. And attention, once rationed, becomes power. The system does not need to deny most claims. It only needs to decide which ones deserve momentum. The rest will slow on their own. This is the part people rarely see. Not the algorithm itself, but the way scoring shapes time. Because once a claim is scored as costly to resolve, the system no longer rushes toward an answer. It waits, and waiting in this system is not neutral. That is where the next shift happens. Not in approval, not in denial, but in delay becoming the decision itself. Part 3. When risk becomes the decision. Once a claim has been scored, the system does not wait to decide whether it will be paid. It already knows how it should behave around it. The score is not a verdict. It is a posture. Low-risk claims move quickly. High-risk claims slow the system down. Ambiguous claims trigger friction. None of this is personal. It is operational. Insurance systems are designed to manage exposure, not individual outcomes. Every claim enters a flow where time, attention, and scrutiny are allocated based on predicted risk. The higher the risk score, the more resistance the claim encounters. That resistance does not appear all at once. It shows up as small delays, additional documentation requests, secondary reviews, clarifying questions that feel reasonable in isolation. Each step has a justification. Each step is defensible. Together, they change the outcome. This is where many claims are effectively decided without being formally denied. A claim that moves slowly costs more to pursue. It demands time, follow-up, and persistence from the policyholder. It increases emotional and financial strain. For some people, that strain becomes the deciding factor. They stop responding. They accept partial payment. They miss deadlines. They give up. From the system's perspective, nothing improper has occurred. The claim was never rejected. It was processed. But processing is not neutral. Processing applies pressure. High-risk claims are routed toward processes that increase the chance of abandonment or settlement. Low-risk claims are routed toward speed and closure. This is not because insurers want to deny valid claims outright. It is because friction itself reduces exposure. The system does not need to say no. It only needs to slow down. Once this logic is in place, outcomes begin to diverge in predictable ways. Policyholders with time, resources, and familiarity with insurance language push back. They submit additional documents. They escalate. They persist. Policyholders without those advantages absorb the delay. They adjust expectations. They accept less than they anticipated. The score never changes. The experience does. Over time, the system learns from these outcomes. Claims that settle quickly reinforce the scoring model. Claims that linger validate the assumption that friction works. Risk becomes self-confirming. The system does not ask whether the claim is fair. It asks whether the process is effective. And effectiveness, in this context, means minimizing loss while maintaining the appearance of procedural neutrality. No one ever tells the policyholder that the score is shaping their experience. There is no notice that says your claim has been classified as costly to resolve. There is no explanation that says delay is part of the system's design. From the outside, the process looks like bureaucracy. From the inside, it looks like control. This is the quiet shift, where scoring stops being informational and starts being determinative, not because a denial was issued, but because resistance was applied long enough to shape the result. And once that happens, the system has already done what it needed to do. Part 4. Where the cost actually lands. The cost of delay rarely arrives as a single moment. There is no clear point where inconvenience turns into harm. No instant when the claim status changes from pending to damaging. Instead, the cost accumulates quietly, shaped by time, resources, and circumstance. By the time the consequences are visible, they often feel disconnected from the process that produced them. The first place the cost lands is housing. Temporary repairs become permanent. Water intrusion spreads. Mold develops slowly. Structural issues that might have been addressed early harden into larger problems. People live around damage rather than through it. Temporary housing arrangements stretch. Friends' couches become weeks-long stays. Rentals fill credit cards. Families compress into fewer rooms. Stability thins. None of this appears in a claims file. From the system's perspective, the claim remains open. From the claimant's perspective, life is reorganizing around uncertainty. The next place the cost lands is cash. Out-of-pocket expenses arrive before reimbursement. Materials must be purchased. Contractors require deposits. Work cannot always wait for approval. Savings drain. Credit fills. Interest accumulates. Each decision feels reasonable in isolation. Repairs are necessary. Life has to continue, but the longer the claim remains unresolved, the more the financial burden shifts. What begins as a coverage question becomes a liquidity problem. And liquidity problems do not resolve evenly. People with financial buffers adapt. They bridge the gap. They absorb delay. They negotiate later. People without buffers do not have that option. They postpone repairs. They accept temporary fixes. They take on debt they cannot easily repay. The system does not see this divergence. It sees the same open claim. The cost also lands on health. Stress does not arrive dramatically. It accumulates. The uncertainty of waiting bleeds into sleep, concentration, and physical well-being. Existing conditions worsen. New ones emerge. Living in damaged space carries its own risk. Poor air quality. Temperature instability. Ongoing exposure to water or debris. These effects unfold slowly. They do not map cleanly back to a claim's timeline. They are not attributed to delay. They become personal health issues, disconnected from the process that contributed to them. The cost also lands on work. Time spent following up on a claim is time taken from employment. Calls happen during business hours. Documentation takes attention. Meetings are missed. Productivity slips. For hourly workers, this translates directly into lost income. For small business owners, disruption compounds quickly. Delayed repairs mean delayed reopening. Revenue disappears while expenses continue. Again, none of this registers inside the system. The claim remains a file. The delay remains procedural. The cost also lands unevenly across households. People with legal knowledge, flexible schedules, and comfort navigating bureaucracy persist longer. They escalate when necessary. They push back. People without those advantages often do not. Language barriers matter. Work inflexibility matters. Care responsibilities matter. Delay rewards those who can sustain engagement. It quietly filters out those who cannot. Over time, this produces outcomes that feel deeply unfair, even when policies are identical. Not because coverage differs, because capacity to wait does. The cost also lands on relationships. Tension rises in households. Decisions become fraught. Financial stress bleeds into conflict. The damage that prompted the claim becomes a constant presence, a reminder that resolution has not arrived. What began as a material loss becomes emotional weight. None of this is counted. From the system's perspective, the claim is still under review. From the outside, the consequences are already unfolding. The most difficult cost to see is the one that never produces a clear event. Delayed harm. Repairs that should have been done early become more expensive later. Health impacts that develop slowly are treated as unrelated. Financial instability compounds quietly. By the time outcomes diverge, the original delay feels distant. This is what makes the system hard to challenge. There is no single moment to point to, no obvious failure, no dramatic denial. The system did not say no. It waited. And waiting transferred risk outward, from the company to the household, from the balance sheet to daily life, from an abstract process to specific people. From the inside, the system is still functioning. Claims are being processed. Payments are being made. Exposure is being managed. From the outside, the cost has already been paid, not all at once. In increments, in places that do not trigger alarms, in lives that reorganize quietly around uncertainty. This is where the real decision shows up, not in the letter, but in everything that happened while the answer took so long to arrive. Part 5. When the system is still working. Most people never experience an insurance system in failure. They experience it operating at its limits. Claims are processed. Payments are issued. Policies remain in force. The machinery continues to run until it doesn't for you. But by the time a claim stalls, the decisive work has already happened. Not a judgment about truth, not a verdict about worth, but a calculation about tolerance. How much uncertainty the system can afford to carry. How much time it can spend without distorting forecasts. How much effort it can apply before cost outweighs clarity. Once those limits are reached, the system does not stop. It adjusts. It slows some claims down. It accelerates others. It redistributes attention without ever announcing that it has done so. These adjustments are not written in policy language. They are embedded in models, in workflows, in thresholds that decide which files move easily and which ones resist closure. They are not explained. There is no notice that says your claim has entered a different phase. No language that says delay is now part of the decision. No acknowledgement that time itself has become a filter. You simply feel it. In the waiting. In the silence. In the sense that the process is no longer responding to you, only to itself. Understanding this does not make the outcome easier. It does not repair the damage. It does not refill savings. It does not undo the stress carried while waiting. But it does make the system visible. It shows that what feels personal is often procedural, that what feels arbitrary is usually patterned, that what feels like neglect is often prioritization under constraint. The insurance system does not fail loudly when it is overwhelmed. It protects itself, and in doing so, it decides where the cost of protection will land. Those decisions are not made by individuals reviewing files one by one. They emerge from systems designed to manage risk at scale, to preserve capital, and to remain functional under pressure. That design works. Most claims resolve. Most losses are covered. Most customers move on, but it also guarantees that some people will always be closer to the edge, closer to uncertainty, closer to waiting, closer to absorbing the strain of keeping the system stable. This is not unique to insurance. It is how modern systems behave when volume rises, margins thin, and tolerance narrows. They continue to function. They continue to deliver outcomes. They quietly change how cost is carried. Seeing that does not weaken the system. It makes it legible. It allows different questions to be asked, not only whether a claim was denied, but why it took so long, why some claims move easily while others stall, and why endurance, rather than evidence, so often determines the outcome. The system is still working. That is precisely the point. Subscribe for long-form stories about how systems actually work when they operate under pressure. Each episode of The Deciding Line follows a moment most people never see, where ordinary decisions quietly determine who carries the cost of keeping the system stable.